So as I mentioned earlier in the show, inflation has been dropping both in Canada and the US, which has been great. March numbers on inflation, CPI, PPI, out of the US as an example, much lower than expected. We just got those numbers this past week. And interesting enough, it looks like CPI 2.4% was 2.8% in the month of February, 2.4 for March. Core CPI 2.8 versus 3.1. We haven't seen a two handle on core CPI in a while. American wholesale inflation, which is your PPI number, also down about 0.4%. It was 0.1% higher in February, and it came in at 2.7% versus the 3.2 in February. So that shows us, I guess, from a starting point in March, before tariffs, reciprocal tariffs were put into place, how good or how low inflation was. In Canada, we just received our numbers as well, 2.4% for the month of March. Less food and energy, it was 2.4%. It was 2.9 in February, and the headline number was actually 2.3%. So we were in pretty good shape with respect to inflation. I think it will be obvious if inflation starts to move significantly higher in April, May, June, in the coming quarters. I think it'll be very easy to extrapolate why that is, and it obviously will be from the tariffs. But I think it's important to know where things stand right now. And we have a few charts to illustrate this. US CPI, our first chart, will show, there you have it, 2.8%, 2.4%. 2.8% is when you take out volatile food and energy. Our next chart is the PPI, wholesale prices. So this is wholesale. So this is businesses. You're looking at 2.7. Again, I haven't seen it 2.7 in a little while. And that's a great number. Next chart, Bank of Canada, key interest rate versus inflation. We've had this chart before. They haven't, or I should say they didn't. Bank of Canada, that is, lower interest rates this morning. Inflation has remained pretty good in just above 2%. Will that increase? I think the Bank of Canada will tell you that they believe it will increase, that they believe that the markets will continue to slow. They believe that business will continue to slow and that inflation will move higher. Not good, that stagflation scenario. Our next chart here shows U.S. inflation as well. Bank of Canada policy rate changes. There you have it. Right there, it shows that we paused. And that is significant, I believe, because I guess here, what do we have? 3, 6, 7 rate cuts in a row. Some at 50 basis points, some at 25 basis points. So we haven't seen a pause for a while. What does that tell me? Well, that tells me that the Bank of Canada is pausing because they see uncertainty. We also, we don't have a way to have that look ahead, that crystal ball. We don't know what's going to come from the tariffs. We don't even have a prime minister right now to be able to negotiate on Canada's behalf. So I think everything is on hold until our elections. Even the negotiation between the United States and Canada is going to be on hold until our election. So yeah, inflation really low right now. And it's a good thing because if we're going to go into these volatile, more high inflation times, it's good that we are going in at a low number.